Hey, Mark again from dynamitestocks.com and stockpursuit.com. I'm back with another video on some stocks that I'm watching and some position updates. As I was saying in the last video, I've been looking at these oil and gas stocks. Like, I think that's, it's not easy to get a read on the fundamentals of natural gas, but I think the technicals are starting to shape up into what could be a surprise trade here, surprise the market. Everybody's trying to buy natural gas for a long time now, and they've just got burned trying to find a bottom. But these technicals are strong. It's been making higher lows, and it's just chugging along. Like, even today, it was up. Today it was positive, even while the market was for the most part negative. So I think there's a chance that it just moves along with oil here, and you get a surprise breakout and a sort of pain trade where everybody's caught short, or people just aren't expecting it, and even producers and the major natural gas companies are that the supply aren't ready, and there may be a reduced supply. There may be not enough, but the thing is the weather too. Like, pretty much all you need is we just need some kind of strange weather event where it's too cold, or or pipes freeze and they lose some of the reserves or the supply. So it doesn't take a lot to turn the market positive. Of course, there's a lot of variables with the fundamentals, and I can't say that I'm a natural gas expert by any chance, but I just know it's a high risk, high reward trade. Well, more high reward, I think, at this point, because it's so down so much. But I've been tweeting about that too. The major forecasts are usually way off, and I think the price went down just way more than people were expecting. So that's one thing I'm keeping an eye on in these oil and gas stocks. I looked at some of these yesterday. One of them is doing really well, but it's a coal stock, the METC. The METC is still hanging in there. I just want to see it really break out over some resistance here. It's just been consolidating really well. Well, it's actually been an uptrend, but it's got that longer term downtrend that needs to break. And this triangle looks really good. I think if it hits 942, 945, if it breaks over 942 and hits 945 area, it's a good long setup. Let's look at oil. Oil's been hanging in there too. It's been so range bound for so long that it's really hard to get super committed to it. That's why I think there's a better chance to play the oil and gas stocks, because there could be a surprise with the natural gas that might be the catalyst to push the stocks. Because I think a lot of people have been expecting oil to do pretty well, maybe just from demand, but China hasn't been quite what we expected too, so it's not the best market for just oil. But the one I traded was I did take some calls in AMPI, because it's the natural gas and oil, and it just looks like it's got that natural gas kind of bottom going, and it's pretty happy up here around resistance. Let's move on to the shorts that I've been looking at. I think over the long term that Getty images, they're not going to do well with competition from AI images. I mean, anytime you're using real life images now, there's more competition, and I just don't know they may be able to change the business model or incorporate AI, but right now there's a lot of risk with that stock. But it's so slow, it's been going nowhere for almost 2 months now. So it's got some support at 461. So let's see what it does. Let's see if it actually starts to break down, because when it does, it goes pretty violently, as it did after earnings here. I'm so tempted to just buy some puts in this though, but the timing is everything, so it's usually better to be reactive. The one Shutterstock, I talked about that one. It's kind of, this could easily be a bear flag, so that's another short watch. Same kind of business model. DLA is a good short. Like, it doesn't have puts, so I'm not really super interested in it. But if you short stocks without puts, like this one's pretty good. I think this drop after earnings was pretty telling. It didn't really recover. I mean, recover, but on pretty weak volume. So, and I mean, a lot of consumer discretionary has been weak, like a lot of luxury brands, and that may trickle down to these other clothing. This is a clothing company, so it may trickle down. So that's a definitely good short idea, because it's just super weak in a fairly strong market the past month or two. Let's look at the major indices and the Qs and semis. Semis held that line there. I was talking about these trend lines and support levels on these major indices, and this is one to watch. Like, as long as it's above this line, it can stay in a range and just consolidate. I mean, it could even go higher at some point if it holds this consolidation, because it's not super bearish. It's holding some support. The Qs, this one kind of surprised me. I thought it was gonna just go more sideways, but it's kind of the same as the semis. But this is I think this is what the channel to watch on the Qs. It's got a clear channel, a downtrend channel that I was sort of watching. I thought it would do it ahead of time, and it's holding that channel really well. So if it starts to really break down out of the channel like it did today, then that's not good. It's we could get a sharp sell-off, more rapid. Other interesting thing today was I talked to a Whole Foods manager, and the Whole Foods manager said that they're busier than they usually are in the summer. She said that summer is usually their kind of slow time, and that they've been surprisingly busy this summer at the Whole Foods. It's in a growth market though, so it's not like it's an old store. So, but that's good to see, even because there's some speculation that there could be some slowdown and cracks in the economy. But if Whole Foods is busier than usual and ramping up for the fall, which is their busy time, then that speaks very well for Amazon, because Whole Foods is an Amazon company. Of course, that's just my scuttlebutt, my sort of detective work. Scuttlebutt's the term that Peter Lynch, the famous portfolio manager, used when back before the internet, you could just go into places and see talk to people and see what the business was like, and how busy it was. Like, I remember even back in the early 2000s, or was it the early 2000s? Yeah, it must have been the early 2000s. You could go to an Apple store or just look at the line at the mall, and the line at the mall was always the longest to the Apple store. So, and then of course they were going selling like gangbusters then, and it's not hard to put two and two together, stuff like that, especially if it's like a isn't a recession or something. But even because Apple's quarter wasn't very good, but people are still spending money on at Whole Foods, and that's pretty bullish for the economy, because that's Whole Foods is not cheap, even with comparatively, and you got the inflation, it's just something to think about that I've been thinking about. And let's look at another one. Yeah, my TSVT. I think I still have puts in that one. I got a bunch of positions on. But yeah, I do have some puts, and it's been just perfect since I found it at in the 8s up there. It's just down. It's been down 1, 2, 3, 4, 5, 6, 7, 8, 9. But it's down 11 days in a row, basically. I mean, 10. That's the kind of thing I like to see in a short. I kind of noticed that back in 2022. You could screen for these gap downs, and usually if a stock's gapping down around their 52-week lows, they'll just follow through with the momentum. It's a lot harder to do it. I found that it's over the years, like buying breakouts is a lot harder with the price action. Like if you see a breakout, it just goes to new 52-week highs, there's a good chance it's gonna immediately pull back, or maybe go one more day then pull back. It's kind of, I would say it's a lot more tricky to buy breakouts than to short breakdowns, at least in these lesser known names like smaller market cap stocks. Like I used to go through a list of there were a bunch that just kept hitting my lows in last year. They just make lows after day after day after day. There'd be more lows and lows. But that's like kind of like TSVT. Like you wouldn't see this happen in Google or something. It doesn't go. Most stocks don't go down 10 days in a row. But bios can be really good shorts when they're weak. The other one was FNCO. This one's still good. Broke major support, and I haven't shorted this one yet or longed it with puts, but it's one to watch. Let's look at TUP. It's still up there, I think. I mean, my gut says this is still a short. Like it's just too choppy though. I mean, really, like I'm not guaranteed that it's gonna come down because they had some news, I believe, on a couple days ago. So it's really just kind of like of not worth trading. I think I'll actually take it off my watch list. YELL, it's kind of the same thing. It's really choppy, and it's not good if you're shorting. I don't take that off my watch list too because there's no setup really. Let's look at some other stocks here. Like I was saying, these ETFs can be really good if the market does start to quote unquote crash, which would be still just like a 3% move in a day or something. These leveraged ETFs can be really good trading vehicles if you trade the opposite way. So this one you would short it, and there's a good chance it'll be more percentage move than it should be. It's just the way these leverage ETFs trade when the market gets really volatile. And you could say that's actually that's sort of a mispricing in the market. Like the quants, I don't think can really get all these ETFs, these little ones. This is the reason you see most things, they trade together, you know, like there's a lot of quants just looking at everything here. China, I'm still short China, and it just did some really nice breakdown here. It just broke down below this level here. It's really kind of what I want to see happening, and this one's been really nice. I think this is a failed signal there. It's a trap, and the bears are definitely in control of this one. SPOK continues to do well. This one has a good shot of hitting 15 and higher because it's in the right industry. It's in healthcare IT, and it's a small company. SAVE, this one has a buyout for $33 a share from JetBlue. And it looks like they really want to get the deal done. So, because JetBlue said that they were going to divest some assets. So, because the regulators said no at first. So this one's a good one for, I think it had liquid calls, but I was just hoping it would go lower because there's been some serious mispricings in these mergers. Like, that's kind of like a good bread and butter, is just to buy merger acquisitions where there's a big mispricing. So this one should have a 40% return anyway. So that's one to watch. The iRobot's the other one, they're getting bought by Amazon for 51 a share. And you see it traded up there, 51 a share, but then came down. I guess it's in the company's results, but I really think Amazon wants to get it done. So I think there's a lot of tech that they want, and because they always need more robot tech with the warehouses, because they pay a company for the robots now, as far as I know. I'm sure they would love to have their own proprietary robot tech just to move stuff around or whatever, in the warehouses. But I'm sure, and of course, maybe they can innovate with it too and grow. What else? I'm trying to find some other things that were some of my favorites. Yeah, CPTN. Yeah, it looks like not so good off earnings, but it held that level so far. I got a tiny position in this one on that breakout. If it breaks down below 70, 72, 71, I'll probably cut that one. MAPS is another one. The MAPS has been holding in, like it's got a good consolidation there. That's the trend level. It's got some nice technicals right now. And my other favorites are the NRDY. It's got really good fundamentals, and Array sort of tried to break down there. I think my stop loss on this one will be probably if it's 390 or so. But I kind of like some of these for the long term, like the NRDY and Yalla. Yalla is another really good grower. It's got trend support down to 460 level. And the IWM, this blue line is the trend support, and it may have just tested it there, but I have a feeling it's going to be 1 or 2 more days where it sort of figures out what it's going to do here, because it's usually holds this level pretty quick, but This is the line to watch for IWM, and it'll probably be around this level too. It's got a support level there up to around 188.85. Let's see, 180. Yeah, 185, 189. It's a pretty good support there. But the key here is this trend line. As long as it's holding this trend line, it's in an uptrend. So those are some of the major ones I want to look at. MITK still holding in. This one, I want to see it just really break out strong, like over 1220. Free, I think this one's still watching, like it still has a chance, but it's looking less good now. RGTI is not looking good for the short term. I still have some out of the money calls that I'm just gonna hold because it's got a bottom. It's got good. It still has support to like 160. Kano is still watching too. This one's been really interesting. They got a new CEO like a month or two ago, and they were exploring to get bought out. So I think maybe he'll rush into another buyout, and there'll be a huge upside. This one has call options, but it's going to be a bottom if it just goes a little bit higher here. About 180 or so is or 177 is a resistance level. So, and it's just been uptrending. All since April. It's kind of interesting. Well, let's look at some more watch lists here. Yeah, these energy ones. KLXC was up. That's an oil and gas. And this looks like it could be a bottom here. It just needs to really push over 1180. But these are the ones I'm watching. XOP, it's been pretty good. It's kind of like an oil. It's kind of gone with oil, really. It's going to make sure that it didn't miss any that I want to talk about. Yeah, I think that's pretty much it. Yeah, the TLRY was one that was squeezing today. This looks like the next squeeze. Tilray. Huge volume came in today. And it looks like the shorts got trapped. It has at least a 10% short interest. I think it's probably way higher because the institutions love to short these marijuana stocks like CGC and TLRY are really good shorts that they just love to short them. So they probably even shorted on the spike. So this is one to keep a watch on. I think it's going to have, I think it might have 1 or 2 more days of big time run where it just spikes. I bought some 350 calls like It's kind of like a lottery play. I think that one. I think the squeeze is gonna keep going. And we've seen these squeezes go for a long time recently, like like the BBIG and Yell, Top, AOI. They just keep going and going and going. So it's one to keep a watch on. Let's check the. I'll check that scan again because it's a really quick one. We can look at find some more supernovas maybe. Hunt for supernovas here. Let's look at 5-day. The Miss Fresh was interesting. Went from like pennies to 3 something. That would have been a good short yesterday. I've been really picky with these, so like I want to see one go up 300, 400% or more, not just from 1 to 2 or 1 to 3, but just a lot of days in a row. But that would have been a good one though, the Mist Fresh. This TDS is crazy. It's still going. I'm not sure if that's a squeeze or not though. I mean, it's not really up enough. 'What's this? USM. USM is up from like 16 to 38. Still going. So man, it's not a short now, but it might be if it goes a couple more days or a big run. 14 days. What is this? FUST. Wow, yeah, that's looks like a pump. Yeah, it's a pump. See how there's no volume. There's no volume before the run started, and it's literally like no volume. Some of these there's 0 shares traded. A lot of these days, most of these days in June, even July, and then you see the volume come in. This is a textbook supernova pump. Probably OTC, unfortunately. But this one will crash, no doubt. Probably, well, it's still going here, so it's gonna crash really hard, probably within the next week. And by crash, I mean down to like back to where it started, pretty much. There'll probably be 1 day. I've seen so many of these. There'll be 1 day. The first day will be a 40 to 60% drop in price, and then a little slower after that, but it'll still come down. But that's just one to keep watching. And if you have short bars and if you can find bars on it, if you can get short bars on this when it starts to really crash, then that's like the ideal short setup supernova. This one's crazy too. MSGM. It looks like a triangle. Still looks kind of bullish, but that'll probably come down too. I'm kind of curious. Let's see if the FUST is a OTC stock. FUST, yep, OTC. Well, that kind of sucks because there definitely won't be options. But back in the day, you used to be able to find shares to short for stuff like this. But just take notes here on what I'm saying. It's gonna drop 40 to 60 to 70% in one day very soon. Could be tomorrow, but it's just gonna happen. $161 million market cap. It's part of the Shell Corp. Yeah, I mean, look, there's one employee. It says there's 2 employees, but there's a CEO, CFO, and director. But yeah, maybe it's 2 employees at the best. Looks like it's not a very big company. Consulting, mining, and biotech. Interesting. That's an interesting mix. How do you do from mining to biotech? Doesn't make any sense. And they put the stock symbol down on the bottom. You don't see that very much, but the copyright's 2021. Yep. I think that's about all I wanted to look at today. Just wanted to share the thoughts on the market, and KRE kind of tends to go a little bit like IWM, and I was way off on the timing on this one. I bought some puts back here, and it surprised again, and just went sideways, and then finally went down today. So that's really been the pain trade, is trying to short these regional banks, even though everybody knows the commercial real estate's, it's not going too well. If you follow the news cycle, it's just not. Even on the horizon, there's a lot coming due. There's a lot of notes, leases coming due in the next year and the year after, and I think it's just a matter of time before you see some more of these with the substantial commercial real estate exposure get impacted, like we've already seen. It's not going to be a surprise. I think that might be the only thing that could sort of push unemployment up, and it could be the only thing that could bring a recession. Even if it's mild, is the commercial real estate impact. But so far it's been sort of isolated. So it's not going to be like 2008, where every big bank had, leverage on CDOs, and not every big bank has insane commercial real estate exposure, as far as I know. So, but that's definitely one of the few cracks, So yeah, listen, I'll wrap it up there, and we'll call it a night. Have a good one.